Okay, that's a little bit better. Sorry, I launched into a presentation but had displayed the wrong screen. This is Rick Ackerman, editor and publisher of Rick's Picks, and I do usually one or two of these analyses a week. And today's subject, I wanted to explain why, even though I'm what you would call a hardcore Permabear, I'm not very persuaded by the long-term bearish case right now, or at least I see no clear evidence that the stock market is about to fall apart, ending the bull market begun in March of 2009. The chart that you see here is a long-term composite chart of the E-mini S&Ps. And although I typically use the hidden pivot method to do all of my analysis, in this case, I'm bringing in I'm bringing in some stochastic analysis. It's something I haven't used in a while, but looking at this chart in particular, I'm reminded of why I used to use it intensively. You'll see the green bars are weekly bars for the E-mini S&Ps, and they show the bull market going back to 2012. It goes back a few years before that, actually. But you can see most recently in 2018, we had a couple of rising peaks here. We made a peak early in 2018 and came down pretty hard, then rallied again to a slightly higher peak. And that was the big correction that we had into the end of December of 2018. Now, the one thing I want you to notice here is that even though we had ascending price peaks, we had descending stochastic peaks. And what that means is that when the E-mini S&Ps rallied to this peak here above the previous one, they were not able to get as overbought as they had been here. And just to give you some idea of how these stochastics work, the thing that would turn these the stochastic peaks lower is that as this rally was happening, each single bar was ending. Each week was ending with a price that was toward the lower end of the bar. So that's what will tend to get these stochastic indicators to roll over as this thing's going up, up, up. As it's going up, up, and up, each new weekly bar has a closing price for that week that is toward the lower. It gets lower and lower on the bar. So that's one explanation as to how these stochastic indicators work. And I don't really use them too much for overbought, oversold crossovers. Essentially a fast stochastic line and a slow one that use different periodicity settings. I like the divergences. And when you don't get divergences, when you get, let's say, a really sold out low here and a very oversold stochastic low here, and then you come down again to make another price low, and you get a stochastic low that is above the previous oversold low. We've got, again, ascending price peaks, ascending lows, and we have ascending lows in the stochastic. And that is a non-diverging pattern. It suggests to me that the trend, the long-term trend, will continue. So that could change. We could get a rally to a new price high if we rallied above 3,000 in the E-mini S&Ps, but generated a stochastic top here that is lower than these two peaks. That would warn of trouble, but so far I don't see that. I see, again, ascending stochastic bottoms that match ascending price bottoms in the index that is being recorded here. So that really, and also you can see that the divergence here predicted a really nasty decline. So there's nothing like that developing on this weekly chart, at least not as of this moment. So that is why, even though I can give you a dozen good reasons why the stock market should be falling, we've got, of course, the trade wars going full bore, and we've got Congress trying to impeach Trump, and a lot of things are very unsettled. We've got most of the FANG stocks, what I refer to as the lunatic sector, that is bought regardless of anything going on in the real world. It's bought relentlessly by institutions. All the FANG stocks have their troubles. Boeing is in a scandal. Apple's iPhone sales are weakening. Facebook and Google are under the gun for privacy, over privacy issues, and so on and so forth. So they're just, also we've got China and Europe sinking into recession. With all of these things, it's absolutely stunning to me that the market can continue to go higher. But rather than try to think those things through, I let the charts be the final arbiter, and they just simplify the process. They take my own subjective thoughts out of the loop. So that's it for today. And I wanted just to mention that if you're interested in this technical analysis, the stochastics that we just used, if you go to rickackerman.com, you can get a no-risk free 2-week trial by simply leaving your name and email address up at the top. Again, no credit card is necessary, and once you've signed up, you'll be instantly in the paying subscriber world of Rick's Picks. Again, rickackerman.com. Just leave your name and email address up there, and when you get there, be sure to click on chat room, where you'll be taken to a trading room that draws great traders from around the world. Let me mention that I'm in a trade. You'll find a lot of good ideas in real time here. I posted a trade myself that was, let me see if I can find it, at 11:01. I said I am buying the September yen on a what I call a counterintuitive signal if it hits 9275, 92795. And the actual trade, let me show it to you, is I'm up a little bit here. I got in at the green line, and I'm up about, let's see, 7 ticks, 85, about $350 on this trade at the moment. And I'm shooting for a profit of more than twice that with the move to the red line. So you'll see other trades posted in the chat room. These are actually things that you can do. We've got one trade, a subscriber mentions that he's in. I had advised a short in Lyft. Let me show it to you. LYFT. We shorted at the green line there, and the trade is profitable about $800 worth right now on 400 shares. Again, we're shooting for minimum red line to take off half the position and take off the remainder down at 47.42. So it looks like, based on comments in the chat room, that we've got at least a couple people involved in that trade. So again, to be instantly transported into the Rick's Picks paid subscriber world, just go to rickackerman.com, put your name and email address there, click Start My Free Subscription, and you'll be with us. You'll have access to many of the features of the site, including some of the technical papers that I put out on that stochastic indicator that I just mentioned. So with that, I'm going to bid you all a very pleasant good day, and I want to thank you for your kind interest. We'll see you again perhaps later this week.